Hi friends, I'm back with a new video. In today's world, banking sector plays an important role in the economic growth and development. So today, let's learn about the banks in India. Before we go any further, if you had not subscribed my channel, please subscribe my channel and hit the bell icon for getting the notification of my upcoming videos too. Also, like the video if you feel that the content was good and comment in the comment section for any further clarification. So without any delay, let's move on to our topic. First of all, let's understand the term bank. Bank is a financial institution licensed to receive deposits and also to make loans on demand. Banks also provides various other financial services such as wealth management, currency exchange, safe deposits, etc. With this term bank, we have always heard about this terminology banking. So now let's see what exactly is banking. Under Section 5B of the Banking Regulation Act of 1949, the term banking is defined as accepting for the purpose of lending or investment of the deposit of money from the public, which means whatever the public is depositing in the bank in the form of time deposit or demand deposit or any other form of deposit, that money is channelized by the bank to the people who are needy. And this deposit is payable on demand or otherwise and withdrawal by check, draft order or otherwise. Now, let's understand the various reasons why the banks and banking sector is essential for an economy to grow. The first reason behind it is the capital formation. The rate of savings is generally low in an underdeveloped economy due to the existence of deep rooted poverty among the people. Even the potential savings of the country cannot be realized due to the lack of adequate banking facilities in the country. To mobilize these dormant savings and to make them available to the entrepreneurs for productive purposes, the development of a sound system of commercial banking is essential for a developing economy. Second reason is monetization. An underdeveloped economy is characterized by the existence of a large non monetized sector, particularly in the backward and inaccessible areas of the country. The banks, by opening branches in rural and backward areas, can promote the process of monetization in the economy. Next important reason is because of innovations. Innovations are essential prerequisite for economic progress. These innovations are mostly financed by bank credits in the developed countries. But the entrepreneurs in the underdeveloped countries cannot bring about these innovations for the lack of bank credit in an adequate measure. The banks therefore pay special attention to the financing of business innovations by providing adequate and cheap credit to the entrepreneurs. The fourth important reason is because of financing to priority sector. The commercial banks in underdeveloped countries generally hesitate in extending financial accommodation to such sectors as agriculture and small scale industries on account of the risks involved in this. They mostly extend credit to the trade and commerce sector, where the risk involved is far less. But for the development of these countries, it is essential that the banks take risk in extending credit facilities to the priority sector such as agriculture and small scale industries. Next important reason is because of the provision for medium and long term finance. The commercial banks in the underdeveloped countries invariably gives loans and advances for a short period of time. They generally hesitate to extend medium and long term loans to the businessmen. As it is well known, the new business needs medium and long term loans for their proper establishment. Next reason is cheap money policy. The commercial banks in an underdeveloped economy follows cheap money policy to stimulate economic activity or to meet the threat of business recession. In fact, The cheap money policy is the only policy which can help to promote the economic growth of an underdeveloped country. It is heartening to note that recently the commercial banks have reduced their lending interest rates considerably. And the final reason is for the development of an economy. A sound system of commercial bank is an essential prerequisite for the economic development of a backward country in order to have proper investment. Now, let's study about the various types of banks working in India. There are mainly four types of banks. The first one is scheduled bank, then comes the commercial banks, next one is the cooperative banks, and the final one is the specialized banks. Now, let's study about each type of banks in detail. The first one is the scheduled banks. The banks under the Schedule 2 of the RBI Act of 1934 are called as scheduled banks. They are also governed by the Banking Regulation Act of 1949. In this type of banks, the total minimum value of the paid up capital and the reserve must be rupees 5 lakhs. The banks requires to satisfy the central bank that its affairs are not carried out in a way that causes harm to the interest of the depositors. The bank needs to be a corporation rather than a sole proprietor or a partnership firm. It has to maintain CRR with the Reserve Bank of India too. The scheduled banks has the right to receive refinancing facilities from the Apex Bank or from the Reserve Bank of India. They are also entitled for the currency chest facilities. They also have the right to become the members of clearing house. The next type of banks are the commercial banks. The commercial banks were organized under the Indian Companies Act of 1956. They operate on a commercial basis and its main objective is profit. They have a unified structure and are owned by the government, state, or any private entity. They tend to all sectors ranging from rural to urban areas. These banks do not charge concessional interest rates unless instructed by the Reserve Bank of India. Public deposits are the main source of funds for these type of banks. There are mainly three types of commercial banks operating in India. The first one is the public sector banks, a bank where the majority stakes, that is 51% or more of the shares are owned by the government or by the central bank of the country. The second type of commercial banks is the private sector banks. The private sector bank is a bank where the majority stakes are owned by a private organization or by an individual or by a group of people. The third type of commercial bank is the foreign banks. The banks with their headquarters in a foreign country and the branches in our country falls under this type of banks. There are 44 foreign banks operating in India. The third major type of banks operating in India is the cooperative bank. These are the banks organized under the State Governments Act. They are registered under the Cooperative Societies Act of 1912 and these are regulated by NABARD. They give short-term loans to the agriculture sector and other allied activities. Their main goal is to promote social welfare by providing concessional loans. That means the main motive is no profit, no loss. There are mainly three types of commercial banks operating in the country. Number one is Tier 1 Cooperative Bank. It is a state level cooperative bank. It is regulated by the Reserve Bank of India, state government and NABARD, and it is fully funded by the Reserve Bank of India, government and NABARD. Money is often then distributed to the public in a concessional manner. The cash reserve ratio and statutory liquidity ratio is applicable to these banks owned by the state government, and the top management is elected by the members. The second type of cooperative banks is the tier 2 or the district level. The central or the district cooperative banks are known as the tier 2 banks, and all other things applicable to tier 1 is also applicable here. Third type of cooperative bank are the cooperative banks that is operating in the village level. The primary agriculture cooperative banks are the best example. As I mentioned earlier, whatever is applicable to tier 1 and tier 2, it is also applicable here as far as the membership and the regulations are concerned. The fourth major type of banks operating in India are the specialized banks. Specialized banks are the banks formed for some specialized purposes. Now, let's look into the various types of specialized banks operating in India. The first one is the SIDBI. SIDBI stands for Small Industries Development Bank of India. It was established in 1989. It was formed for providing loans for small scale industries or businesses. Financing small industries with modern technology and equipment is done with the help of SIDBI. The second type of specialized bank is the Exim Bank. It was formed in 1982. It stands for Export and Import Banks. It is formed to get loans or other financial assistance with exporting or importing of goods by foreign countries, and can be done through this type of banks. The third major type of specialized banks operating in India is the NABARD. NABARD stands for National Bank for Agriculture and Rural Development. It was formed in 1982 and has its headquarters situated in Mumbai. It was formed for getting any kind of financial assistance for rural, handicraft, village and agricultural development. They provide their funds through the RRBs. They also fund the cooperative banks across the country. It is also known as India's Apex Development Bank. It has 31 regional offices across the country. Today, we had learned about the banks, the various types of banks operating in the country, and the significance of the banks and banking structure for the development of a country. I hope you all liked the video. If you had not subscribed my channel, please do subscribe my channel to stay tuned with me and also to show your support. Till we meet with a new topic, auf Wiedersehen.